Certainly a lot of focus on the event risk this week, but I think if you look at the options market, if you have a look at 1 week implied volatility in euro dollar or dollar yen or any of the markets that are actively traded, very, very low implied volatility coming through. It shows that traders are not expecting a big move this week, despite with the Fed meeting, despite the G20 at the end of the week, despite the Dutch elections, despite the potential for Theresa May to enact on and trigger Article 50 and a number of other macroeconomic factors that are playing through and political factors are playing through markets. Of course, everyone's now started to focus a little bit more on the relationship between the Dutch and the Turks at the moment and see if that becomes more of a market story. But from what we're seeing in terms of implied volatilities structures, they're very, very low, very sanguine. No one's really expecting a big move. And certainly the move in implied volatility in dollar yen is very surprising. If you look at the price action we've seen this week, and US futures are very flat on the day. They have opened slightly earlier because of the change in the clocks, but Dow futures, S&P futures, very much unchanged through the Asian time zone. We are seeing some positive flows in China. Actually, Chinese markets are looking quite good. The Hang Seng on the offshore side of things up about 0.9%. We've seen a number of investment banks, Morgan Stanley a few weeks ago, but now Goldman Sachs going overweight on China's equity markets. That's one for the radar. Potentially you could see something like the A50 or the CSI 300 looking to outperform from here, given some of these views. But certainly they are today, and there's some good flows in those markets. The ASX 200 is down about 0.4%. We're pretty much near the lows of the days as I speak. We are seeing a very defensively positioned market though. So the sectors that are outperforming are the telcos, the staples, the utilities, those spaces, materials, and certainly energy under all sorts of pressure today. We've seen one of the big futures markets which is actually seeing a bit of a move today is the oil market. It was down, I think, 4 or 5 days in a row. Had worst week last week since November. And if you look on Friday, we did see that or the weekend, we saw the Baker Hughes rig count increase by another 12 rigs. So we are seeing the oil price, US crude price, down at just over 1% at the moment. But I think a few buyers are stepping in at the moment. But yeah, that's one to watch. And the energy sector in the ASX under all sorts of pressure as well. I think as we go into this week, we want to keep our eye on the dollar. Dollar at the moment is not really moving too much, so there's no real concern about holding dollar positions given the event risk that we've been seeing. But overall, as I say, wrap up, it's an interesting week. It will be a defining week in terms of the Fed and everything that's going on. But there's no real concern in markets today. The only market which I will say is that the ASX is more defensively positioned than people looking for pro-growth, pro-cyclicality there.